Good morning, trade pros. And I'm going to move you closer and closer. Come over here. Come closer to me. I got a secret. Just kidding. There's no secrets. But good morning. Welcome to the morning market update. The last one of this week because it is Friday, November 21st. I got some really fun stuff to talk to you about today, even though the market's not doing fun things. And a great learning lesson for all of us here in today's, in the last 24 hours, price action. And not just a good learning lesson, a good relearning lesson for people that have already learned the lesson. Some lessons, you don't stop learning in the market. And other lessons, you could just never learn fully. And they're both the same. All right, so let's kick off the morning market update. It's risk off in the market tone this morning. It's not a surprise. Equities are red in Europe. Stocks is down 1.3. DAX is down 1.1. All right, the futures markets here in the United States, ES is flat, NQ is kind of flat as well, but after a ravaging downside day, all right, NVIDIA was down 1.5 pre-market, but it gave up a lot of its yesterday gains. And in the trading room yesterday, one of the first things we did with our trading room is anchor to NVIDIA. We were talking about, okay, if NVIDIA led a lot of these upsides, you should be looking at the NVIDIA stock price chart throughout the day, kind of as a correlation matrix or as a correlatory market that you look to for information. So where is the S&P going to go? Where's the NASDAQ going to go? Where are these markets going to go? Yesterday, more than ever, was kind of tied to NVIDIA. NVIDIA was the person with the leash attached to the dog wagging the markets around. So it's like you had to follow it. And if you did, you would see early on that even though we kind of had a bullish narrative, we saw NVIDIA losing momentum very quick off the open, closing off that gap and getting bearish. And that's where the whole room flipped to the short side. We'll talk about that in a second. But NVIDIA gave up all of its gains. And it's surprising, yes. Is it shocking? Yes. Whatever you want to call the word. But it happened in real time. And in real time, it wasn't that shocking. Because the turnaround moment was there. And it was just something you did as a trader. You don't have time to be shocked in a trading session. You just only have time to react. All right, so NVIDIA didn't do good. Bitcoin and Ethereum, not good either. Down 10%. A little mini flash crash in Bitcoin this morning, below 82. But it recovered some ground, but it's slowly kind of finding its way back to the low. So what's driving the sentiment? Everybody wants to know, why is it suddenly so bearish? So I'm going to give you some reasons, and I'm going to tell you at the end why none of these reasons really matter. NVIDIA, yesterday we saw the sharpest intraday reversal in NASDAQ since April. That's a nearly 5% swing. Massive, massive swing. All right. Traders saying doubts about AI revenues, stretch evaluations, blah, blah, blah. Back to the AI bubble talk. That's, what do we say in yesterday's update? We said NVIDIA earnings are fantastic. Everything is great. And the last question I asked you before we ended the stream, I don't know if you remember, is this going to be a great opportunity for large spec holders to sell NVIDIA? They got a little pop. They got the excitement they needed. They probably are going to have some retail buyers this morning. Was this the opportunity to offload some large size NVIDIA quietly under the radar in the guise of so many people wanting to buy it because earnings are so good? Remember that. That's kind of how we ended off the webinar. We got our answer. Yes, it was. Okay, so now we move forward to the next thing. Today we have really heavy OPEX. Option expiry OPEX is kind of the short form for it. One of the heaviest monthly expiries in any November ever. So just keep that in mind. So there's going to be some seesaw action as well around the call and put walls. So today more than ever, they're going to be more sticky. I'll talk about that in a second as well. All right. It could also be the fact that the Fed is not cutting rates anymore. This is the second, and I only have two. I said three, but I only have two reasons you could kind of pinpoint this on. Yes, there's going to be potentially no rate cut in December. So, the odds went from 70% to 27% of a rate cut in December. And the market likes rate cuts because it makes financing and money cheaper. And cheaper money means more flow of it, more liquidity. And liquidity means pump the stock market higher. All right. But from 70% to 27%, we lost that rate cut. Plus, the AI bubble talk is actually spooking people. And it kind of turns into a sell-off. And I'm going to tell you why none of this matters after this. But first, Feds Williams actually kind of rescues the market this morning a little bit. And this is the problem, is we need things to rescue the market, by the way. I'm going to get to it. Just kind of going to close off with a stop, but we're constantly needing things to rescue the market. Oh, I hope to gosh NVIDIA does good. Oh, please, NVIDIA. Oh, yes, NVIDIA did good. Oh, no, it sold off. Oh, please, somebody tell us there's going to be a rate cut. Oh, my God. It's like that little whiny kid that needs sugar. And he's not going to shut up until you give him sugar. All right? And you could try whatever parenting method you want, but this kid is having meltdowns of epic proportions until he gets his sugar. Give it to him. Make him shut up. That's it. That's what the market is behaving like. A little snot-nosed kid out with his parents in public, knowing that if he throws a big enough fit, it'll get something. And so this is where we're at. And this is the conundrum. And Feds Williams this morning comes on the mic and pumps the market higher with a few comments. He says he's opening the door to near-term rate cuts, said December's not off the table, and sends a very dovish message to the market. And Feds Williams is important because he's vice chair of the Federal Reserve. So Jerome Powell is the chair. Feds Williams is second in command as vice chair. You should listen to Fed Williams. OG, been around forever, and vice chair of the committee. When he talks, the market takes note. So take note. He says there's still the possibility of a dovish situation in December. Now, here's what worries me about this market. I'm going to turn around and then we're going to do the trade plan. What worries me is there isn't any one catalyst driving this deleverage in the stock market. Like, for example, in April, we had tariffs. That's a catalyst, like global tariff war, market sold off on the sudden announcement in April of this year. COVID, a global pandemic that we were told is going to kill everyone that just looks at somebody who knows a friend that had COVID. All right, that's scary. That's really, really scary. Stay inside. All right, that's one kind of, black swan. That's a room full of dynamite and somebody with a lighter running around recklessly. Things are scary. There's not one catalyst right now. All right, NVIDIA AI tech bubble. So what? 3 weeks ago, nobody was using that stupid term. Nobody was afraid. Now suddenly everyone's afraid. Not big enough. Not big enough of a catalyst. All right. The Fed cutting rates. It's one freaking meeting in December by quarter basis point. We really freaking out over that? I don't know. All right. We're also in some of the most seasonal strength moments of the stock market. It should be. There isn't one catalyst driving this that you could say this is the reason. Liquidity crunch from the Fed. We could have said that before the government shut down, but the government reopened, so there should be even more liquidity coming on. So it's not a fear. So the buyers just can't take firm control over once again. All right. And you could try and explain it in a number of different ways, but it's just weak. It's a weak market. The point is all rallies are failing at the moment. All right. And that's usually structural. It's a structural issue. It's not that there's something causing it. It's that there's just more sellers than buyers. For whatever year, this year, going into the end of the year, people have decided to sell. All right. And there's many catalysts for sure. But the constant reoffer, the constant return of the sell side in the market is a problem. It's a very big problem. Anytime we put in a low, we think it's going to be the low of the move, a new low comes. Oftentimes, just when everyone is frustrated at it and gives up buying it, the turnaround happens to the upside. So, ironically enough, the upside may be the closest now, considering the circumstances. All right. But this is usually a sign when really good news ends up being shrugged off. It's usually a sign we need to flush more long positions. All right. Throw more positions overboard on the ship just to balance out the load. All right. Just too many people were long into highs, and that's okay. All right. So today is Friday. Today is option expiry, one of the biggest of November's. Let's turn around and do the trading plan. But yeah, this is the market that we're kind of going into, and hopefully enjoy this update. Somebody's got to give it to you straight, and it's usually an issue. But I also think we're close to the lows. I'll show you the seasonality chart in a second as well. All right, and the trading plan. Let's turn around and do some work. Crazy week, right, OTM? Morning, J-Rad. Morning, Marco, Michael. Wrong screen, wrong camera. All right, so yeah, let's get into it. First, I wanted to show you the thing I wanted to show you. How's that for being a politician? I should be a politician. I said nothing there, but I said stuff. Okay, stock market seasonality. And we don't come up first anymore, huh? Wow, that's good. Thanks, Google. Oh, man, we fell off. We fell off big time. We used to own that keyword. Okay, anywho, there's no need to panic. Oh, but I can't show you this one. No, not this, guys. Dang it. Oh, this is embarrassing. I'm just trying to find a chart. Okay? Like, come on, guys. Whatever. I'm going to show you this one. LinkedIn. Who wrote this? Me. Okay, that's good. Okay, so look at the stock market seasonality. This is the one I was looking for, this chart. Just not because I wrote it. Was I like it? So January, we're up, okay? March, April, we're up. The only real negative months are August and September. So going into October, November, December, the expectation is for gains in the stock market, all right? And this is why they say sell in May and go away, because you kind of missed this chunk of seasonality. Now, this is only till 2015, but the picture doesn't look that different when you take in an updated chart up to 2025. So, because it's like 56 years seasonality. So what's the plan for today? Well, today I'm going to have to start with a different chart, okay? And I'm going to start with this one here. This one is a weekly volume profile chart. And I still use volume profile when there's major moves and I feel a little lost in the market context. But I think there's quite a bit of accumulation of volume here and around the 65.20. And then right here, let me go here. Get you some more accurate levels. How come when I click it doesn't work? I swear, like, Streamlabs really messes with your screen share and pen tools. Yeah, see, there should be a crosshair. Anyways, I'm going to just draw it. You figure it out. So 6,500, just below 6,500, and this little notch, which is around 6,510, are good supports. We got a lot of downside, and I just think that, you know, at this point, where could this entire correction be over? Around the 6,520. All right, in another piece of data, though, that I want to show you, and I'm going to open up TradingView, and then I'm finally going to build you this trading plan. But you kind of have to know, all right? I don't force this update to be quick or to be in a certain amount of minutes because it's more important for you to know than anything else. So let me open up TradingView. And I am going to show you a little indicator I custom built myself first. Let me just get it to be, all right. So look, the market's not bearish enough yet to give us a buying opportunity. And you see these little green things I've coded. It's an indicator that I created myself that gives me buy and sell opportunities for the portfolio. But you tend to get some nice buying ones here. You can see they work pretty much. If you buy and hold, it eventually goes up. And the sell ones give you points in the market where it slows down. Well, since the last buy here in April, there hasn't been a sell one yet. But I can imagine that it's coming up. All right. Or not a sell one, rather, because sometimes you don't get a sell one. But you will get a buy one. So I'm looking for this thing to flash green at some point. I don't know how close it is. I could open it up and figure out. But this is the triple Qs. And if you go ES, one exclamation, it doesn't change because these things are actually custom coded and written on S&P 500. It's just overlaid on a chart. All right, so at some point, I could imagine us, if we get down to the 6,400 being sort of the end of this pullback move. But we can get lower than that as well, down to like 63 and 62.50. There's still some downside, but we're hoping that this holds out as resistance and continues up to have a good end to the year, or else it kind of comes unglued and becomes very bearish. So the plan then for today is this. All right, the plan for today is yesterday we talked about, what did we talk about in yesterday's move? This is yesterday's open. We said, let's get bullish. It is a bullish kind of thing overnight, but I said, let's get optimistic, but careful. And I got the long trade here, close to off the open. And it was pretty miraculous because Victorio in our trading room didn't get the long trade. And he said, well, this is what I'm going to do. I'm going to short it. These buyers tried to get up 2 to 3 times and they kept failing. And as they were failing, I'm long on support structure and I'm distributing or selling off my long position near the resistance because it's revealed itself to me. and it can't break that resistance. So there's two stages of order flow trading, and this is going to be part of my order flow course that I'm working on. I just finished lesson 4. It's going to come to you soon, sooner than you may be ready to accept it. But there's the reveal and the reload. All right. So once you get the reveal of a level order flow, you have to respect it, because whoever revealed it is reloading it. So, all right. So we're up here. We saw a reveal that we couldn't get above it. The reload was happening to the sell side, and I just couldn't continue to buy it. I told Victoria, you know what, I'm out of this long. And Vicky goes, he giggled and he said, well, I'm short. And then I flipped over to his screen to watch his trade play out. And I told Victoria, I'm like, isn't this interesting, Victoria? This is how it always works out with traders. You had the bearish view and I had the bullish view, but we were both selling at the same level. This is why order flow works. Boom. Think about that for a second. I was buying it. Victoria was shorting it. We're both selling. I was selling the top or near the top to get out of a long. He was selling the top or near the top to open up a short. Our stops are on the opposite side of the market, but our limits are on the same side of the market. All right. So, should kind of have an interesting takeaway there. And then as I close it out, Victoria wrote it to the downside. I don't know how much further he wrote it because I wasn't there for that long. I don't trade full days. 10:30 a.m. I'm out. So there was the open. We just erased all these losses. Very bearish occurrence. Two things could be happening here today, and we're going to have to wait till next week to find out. Either this is a flush of buy stops. We sharply reverse it higher. All right. Like a little liquidity flush only to move prices back up, shake out the longs. It was too easy of a long trade yesterday with NVIDIA, but or this is the beginning of a bearish trend. So what you have to kind of trade is 6,600 here at the moment. Below this, you're kind of bearish. Above that, you're bullish. Simple as that. So watch for these moments here to build a short. And if we get above, you could be looking for a long position. The 66.60 to 70 level is a really big resistance. Watch out for that one, because if you're long and you run into it, it's going to be like running into a ceiling, or you're going to hit your head off the wall. You're going to pull back and curl. So that would be your second entry. Okay, so that's one. You have two for the long side. Short side, I mean, you stay below 66.10 and, you know, you're going to get your short. I'd like to see it below the prior day cash close and the prior day lows. That opens up a lot more new liquidity. And then this green line here, the 05 level average, is your put wall, which is going to come into really big, what's the word for it? It's going to be a really big level because it's OPEX, it's option expiry. So as you approach this level, careful. There's going to be some support below the 6,500. Roll Tide, that's a flush. Just get short and stop thinking. Just close your eyes. But that's the read from me. If you guys have any questions, let me know. It's Friday. I think Fridays get a little goofy. It's option expiry, and it's going to get even more goofy because of that. It's one of the biggest option expiries for November. So don't know what else to tell you other than just careful out there for day trading, and we're gonna, next week's gonna be crazy. We're getting a lot of the news coming back as well that was missed by the government, and so there's gonna be a lot of opportunity. Just for now, stay cautious, and I'll see you guys on Monday. Love you all so much. OTM, appreciate you. JRAD, Marco, Mikey as well. Hope you guys are good. Thanks for jumping in the discussion with me, and I'll see you next week. Have a great weekend, everyone here. Take care. Bye.